Okay, so what kind of situation do we have at the moment from a monthly perspective on Euro JPY? Now, clearly, we already spoke about this. The market, where did it actually go and test the possible liquidity that I wanted to grab from a monthly perspective? We know that we have this clear supply area here with this green candle, and that is exactly where the market went to test the high of the supply before starting this move to the downside. Now, if you want to measure when basically the next impulse to the downside is supposed to start, usually just taking your Fibonacci from the high to the low of the retracement will basically give you a minus 27, which is definitely a great target, which in this case is lining up also very nicely with the structure that you have here from a monthly perspective at this lows. So definitely we might see the market go, and we must expect the market to go and test this support from a monthly perspective. So we know basically where we have our downside target here on Euro JPY. We know that the market rejected a very strong supply zone, and we can expect the lows to break. Now, from a weekly perspective, what we can see that basically the market failed, at least at the moment, it failed to basically break below the previous weekly closes and also monthly closes. The market from here had basically started the retracement that we just spoke about from a monthly perspective. And now basically with the last weekly candle, we have seen a strong rejection of this area. Now, going down from a daily perspective, what we can see. Now, on the daily time frame, we can see that basically in rejecting this support that we have from a weekly perspective, the market has created this minor W formation. So definitely we at least expect the market to go back down for a retest of this area. Then we expect the market to try to make another impulse to the upside, and possibly this is all a fake move, because at that point all retail traders start to buy and banks can actually sell. Now, if we go and see what is the situation from a COT perspective, so what hedge funds are doing at the moment on the euro and what they're doing from a JPY perspective. Let's go and get our data and see what kind of situation we have. So if we get our COT data for the JPY, what kind of situation we will have. Now, if we go and check the data for the JPY, we can see that with the last reports, again, more longs getting added. So we started with 805 long positions. Now with the last report, another 6,232 longs opened from a hedge fund perspective on the JPY, which is exactly what you expect during basically an economic crisis period. Money should be flowing to a safe haven like the JPY, so all JPY pairs should be making strong moves to the downside, should start strong trends to the downside. So going back to our Euro JPY situation, what we can be looking at, how we can be approaching it, and how we will be approaching it with students. Now, there are two options here that basically we will be applying on this pair. Option number one, we know that basically the W formation is supposed to complete. Okay, so basically we're supposed to see the market make a move back to the downside to test this structure. It doesn't mean that it will happen, but it has a high probability of happening. Trading is a game of probabilities. So basically, the first thing is that we will be monitoring price action from a 4-hour perspective inside of this region, waiting for the market to shift from a bullish market to a bearish market from a 4-hour perspective. And if the market will shift from a bullish market to a bearish market and provide to us one of our valid entries, then what we will be doing, we will be taking a nice short position, okay? And when the market will hit this support, we will be already risk-free on the trade. So if the market bounces away from this area, anyway, we will be risk-free on the trade, and it will be a break-even trade. On the other side, if basically the market will break this area, then at that point, perfect, we will be in a great trade with a great risk reward to the downside. Because the whole point is that the problem is that, yes, we have a lower target, but we have strong support in the middle. So if we are able to enter before, with obviously a great entry, before this support is hit, then we can be risk-free when the market will actually hit it. On the other side, if we don't find a good entry before the market hits this area, then from here we should see a bounce, and then the market should start to fail to basically break the area, break the structure back to the downside. And that basically, if the market will do that, so break the structure to the downside, then At that point, again, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries on the retest of this previous support, there will be turn resistance. At that point, again, we will be looking for an entry. So as usual, guys, being adaptive and searching for the best probabilities and best risk to rewards in the market, as we have basically done for this beautiful impulse to the downside, if you remember when we capitalized on the move. Here is a little bit more delicate situation because, as we said, we have a lower target, but we have support here. Now, if the market from here wants to go for a deeper retracement, obviously it's a completely different story. The market from here will just bounce aggressively to the upside, and we have to adjust to the new market structure. And I will also try to keep you guys updated here if there will be a change basically in how we will be approaching this, if the market will obviously bounce away aggressively from this area. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.